Okay. So I know it's been a long day, and those of you who have been here all day have had to hear me and my terrible jokes, so thank you for bearing with me. We know we stand between you and a happy hour, but I promise we're going to make this worth your while. This panel is going to identify the next memes. No, I'm just kidding. Let me turn it over to our moderator, Sarah. Please kick us off.
Awesome. Can everyone hear me? Yeah. My name is Sarah. I'm a reporter with The Block. I'm really looking forward to this panel and to get all of your guys' expertise on everything. We're talking about meme coins. Wanted to see if everyone just wanted to go around and introduce themselves, and we'll get right into it if you wanted to start first.
Sure. Hi, everyone. I'm Dan Zinn. I am the General Counsel and Chief of Staff of OTC Markets Group, based out of New York. It's over-the-counter equity trading, about 12,000 securities, largely non-U.S., about 9,000 non-U.S., and from a U.S. perspective, think like community banks and firms like that that trade otherwise than on the New York Stock Exchange or NASDAQ.
I'm Johnny Reinsch, and I'm the Executive Director of the Tokenized Asset Coalition. And we are an industry group that advocates for tokenized assets. Our members include Securities, Chainlink, roughly 100 billion or so of market cap spread across our members. And we do initiatives that include building new technology to assist in areas where our members' core business models aren't like sort of interoperating with others. And I actually launched a meme coin at one point. If you guys are familiar with the term real-world assets, yeah, RWAs, I actually launched real-world asses. Finally, we can get more into that, but I'll pass.
He's passing to the regulator, by the way. Good afternoon, everyone. My name is Christina Rolle. I'm the Executive Director at the Securities Commission of the Bahamas. We're primarily a financial services regulator, but we regulate the capital markets. We also developed and we administer the Digital Assets and Registered Exchanges Act, which was one of the first pieces of legislation to develop a taxonomy around digital assets.
Hi, my name is Saumya Manohar. I'm the General Counsel of Public. Public is a modern investing platform where you can open a brokerage account, investing across stocks, ETFs, crypto, options, margin, retirement, et cetera, et cetera. And I'm really happy to be here with you talking about meme stocks and meme coins and all the rest.
Great, and I'm going to stick with you if that's okay. As General Counsel then at Public, you're on the front lines. So how has Public experienced the meme stock phenomenon since GameStop, and what trends are you seeing on the platform?
So I'll give you a little bit of background if that's okay. So Public launched in 2019 and really sort of became a real business in the GameStop era of 2021 and 2022. And so I'll set the table a little bit for the group. I'm sure all familiar, but in January 2021, there was sort of the GameStop episode where there was a huge run-up in prices of GameStop, Coase, and AMC. If you were there, you'll remember that GameStop went from $17 a share to $500 a share, so that was a 30x pop. AMC went from $3.50 to $17, and Coase went from $3 to $127, which was a 40x pop. And we saw a huge number of retail investors come into the market, and we saw the meme stock phenomenon, which is that where prices don't really move with quote-unquote business fundamentals, we can query what that is now, or macroeconomic trends, but instead with vibes, with how the people are feeling on the internet. And we saw a huge uptick in retail trading volume where retail represented 24% of trades during January 2021, which is just a huge share of the market. And then fast forward, in July of 25, so just a couple months ago, we saw this sort of rinse and repeat, not at the same scale, but you see Open Door pop, Krispy Kreme, Kohl's, not as big as before, sort of Open Door went up 12x, again, on the heels of this social media storm, which is really interesting. And what's interesting also about Open Door is that retail really showed its might. They changed the CEO, they changed the whole corporate strategy, and Open Door has continued to sort of be high after that. And so I think what we're seeing on Public is that meme stock trading is not these one-off things, but it's actually just a recurring thing. And every month you see a new meme stock on the platform. Nothing as crazy as AMC or GameStop or Open Door, but Mullen automotives was a hot ticket, and e-bets was a hot ticket in 2024, and you saw Bed Bath & Beyond, everyone was buzzing about it, and it's going into bankruptcy, or it's going to be saved from bankruptcy, and you see these sort of random meme tickers on the platform sort of for a while, and this is like a continuing trend that's not going anywhere, I think.
And wanted to ask too, when you're talking about just different cycles too with meme coins, when it comes to when Trump launched his meme coin, oh gosh, was that in January? Did you see anything, or is there any trends that you noticed with that one as well?
Yeah, I think like really the Trump coin, and really maybe even Trump coming into the White House really represents a real change in how people are thinking about the meme stock phenomenon. If you sort of bring yourself back to January 2021, which I know was like a lifetime ago, but you can remember that like everyone, all the political elites that were talking in DC, all the media elites that were talking on CNBC and MSNBC, they were so dismissive of Roaring Kitty and Wall Street bets. They thought they were losers with too much time on their hands. And you know, and if you read the GameStop report that the SEC published after the GameStop, sort of running into what caused all this mess, they really put it at the hands of two things. One is payment for order flow, saying that the retail brokers essentially like wanted to encourage retail traders to trade more so they could capture payment for order flow on the back end, and also digital engagement practices such that like the online trading platforms, zero commission, like Public, like Robinhood, were trying to nudge retail investors to trade more and more with digital engagement practices like confetti. And like all of this has really not stood the test of time 4 years later. Like, well, Roaring Kitty, Wall Street bets, they're not losers with too much time on their hands. They are now they really represent mainstream investors, and Trump is, taking it and has come into power on their heels. And like, obviously, this trend in meme stock trading is not a one-off thing. It's not this niche thing. And it wasn't the creation of Robinhood and confetti. It's this deeper, broader cultural movement, part of this one sort of aspect of the larger attention economy. And now you see that like it wasn't confetti from Robinhood that created it. It was a really sort of more of a grassroots movement that is going to continue and that we'll have to sort of adapt to. It's not going anywhere.
Great. That's really interesting insight. And then Dan, wanting to turn to you, could you see what sort of trends are you seeing with over-the-counter? And yeah, what are you sort of foreseeing that could be happening in the next year or so?
Yeah, we said we were going to create some controversy here, so I think it's all confetti, by the way. No, look, the meme stock phenomenon, I think you're right, this attention sort of economy or the focus on where the crowd is going is just another iteration of what we have seen when you talk about really being a business since 2020 or 2021. I still feel like we're a young business, but we've been an electronic trading platform for 25 years. We have seen stock promotion over the course of years. We have seen these events that create dislocation in the market price, where the market price is not related to company fundamentals or the liquidity, the amount of shares being traded on a day-to-day basis is just disconnected from anything you've seen before. The motivations might be different, right? When it's a crowd, when it's a meme sort of vibe, that is our panel, right? As opposed to an insider or an affiliate who has a specific pecuniary interest in raising the price and then getting out and selling. But the impact is the same if you're a retail investor. And so you see a price that is skyrocketing. You might want to get involved. It creates a vibe or it creates a movement. And so those are kinds of trends that we've seen for quite some time. I know we'll get into this a little bit later, but there are ways to sort of help investors identify where that's going on and help the market understand when those things are happening without, clamping down or without being overly paternalistic in ways that I know get discussed around things like meme stock trading. So in terms of trends going forward, it's going to continue to happen because it's really not confetti and it's really not just Roaring Kitty and it's really not just a few insiders or affiliates who have small 5-cent stocks that they're trying to pump. It is a phenomenon that has been around for years that will continue. And I think the questions, and I'm so glad we have a regulator on our panel too, but the questions are going to be how do we adjust to it and what do we do to make sure that investors are aware and that the market can sort of continue on and continue its growth, knowing that this is going to be a piece of what we experience.
great, and definitely want to get to the regulations too at one point. Johnny, I'm going to turn to you for now. What are some of the cultural forces that you think drive like the meme stock phenomenon? We have like Dogecoin is obviously, I think that's the biggest one now. The Trump meme coin. Are those the same forces that are behind crypto pumps, or how do you view that?
Well, I think when you can go viral, and then you can financialize culture at the same time with a token or a stock or, frankly, anything that can be tied to that virality, you're going to have that happen. And I think, we see this. I mean, momentum trading in crypto is kind of what almost every crypto token is based off of. If you actually tie it to the fundamentals and go underwrite based on revenue or whatever the traditional financial metrics are, you're not going to buy that coin. Trust me. If you, and I'm talking like some of the best ones out there that have massive market caps. If you dig further into the liquidity and wonder, okay, how much can they actually settle? You're definitely not going to buy them, I promise. But when there's a vibe, when there's a movement with a community, and there's maybe this like 1%, nag in the back of the head of like, oh, this $1,000 could turn into $1 million. Well, then it's going to be really easy for that to pump. So I think I don't want to like proselytize too much on like the undercurrent of what's going on in culture, but I think there is this component of financialized culture that you combine with. It could be the meme stock, it could be the meme coin, it could be the stock that actually has good, like Tesla, I would argue, is a meme coin or a meme stock at this point. It trades completely outside of what you would underwrite it to if you were a sane investor, and yet Elon can make that case. Good on him. And is he lying? Is he committing securities fraud? I'm not the one to answer that question, actually. But I don't think so, because I think he's just pointing to the future of something that he hopes is on the horizon. Then he has this foaming at the mouth kind of investor base that will never sell their position and will buy into anything that he says and they tell their friends at Thanksgiving and the like. So I think it's this combined, like persona, this financialization of culture, and then this like back of the head, maybe I'll 1000x this position. And that drives the phenomenon, regardless of the underlying asset.
Got it, and that's really interesting too with Tesla and just looking at that from that perspective. Wanted to also, of course, touch on crypto markets faltered a little bit recently. Has it been a week already? Yeah, last week, as traders witnessed a massive sell-off after President Trump said he would impose a 100% tariff on China, or on imports from China. A bunch of different meme coins, Dogecoin, of course, pudgy penguins, they all dropped off. They have since rebounded, as far as I know. But how do you guys all specifically sort of factor this in, or how do you view last week's crash? I don't know if Saumya, if maybe you want to start with that one.
Yeah, so, just to recap a little bit, on Friday around 4 o'clock, Trump tweeted about China tariffs, 100% China tariffs, and then within an hour, you saw $6 billion liquidated from the crypto markets, and then within 24 hours, it reached $19 billion. And so I think people are still doing the forensic investigation about like what exactly went down, but it looks like two things were happening together. First, Bitcoin immediately went down to like 100K, just over 100K, which triggered a lot of automatic liquidations, which forced, sellers into really thin markets with few buyers, which means only prices went further down and triggered further margin calls and liquidations. So that was a little bit of a vicious cycle. And then there was this glitch on Binance with a popular pegged stable coin that looked to lose its depeg, and so everyone was having PTSD, I think, from Terra Luna, and that caused a lot of flight of capital as well. On public, luckily, we didn't really see any halted trading on Friday. We don't offer crypto trading directly, but we offer it through a partnership with Back Crypto Solutions. And so luckily, the market still continued to whir, and we were able to match trades, and everything was working. However, we did see spreads widen quite a bit, and it looks like through sort of Friday's madness, a lot of the market makers who usually provide retail liquidity step back entirely from the market, or they widen spreads as a defensive measure. And so, retail had to pay for that. What's one interesting thing, I think, is that Friday was one of the, highest volume days on public. Retail bought the dip, and like that's behavior that we are seeing pretty consistently in the last year, where Liberation Day obviously was a great example of that, but really every market sell-off for the past 18-ish months, you see retail just pouring more money into the market and causing things to really rebound really quickly, which I think is interesting because, there's all these countervailing forces between tariffs, between sort of a slowing hiring that you see in the news, and yet the stock market remains resilient. And I think a lot of that is thanks to the retail investor and their sort of relentless optimism and always be ready to sort of buy the dip, quote unquote, and take a long position on the U.S. economy. And you also see that on the Main Street side, on the real economy side, where so much of the resilience of the real economy is because the U.S. consumer is just continuing to spend regardless of maybe tariffs are increasing prices, maybe inflation might go up in the future, but the U.S. consumer continues to spend. And so, one of the things I like about working at Public is we're really fighting for the retail investor, and as sort of 20% of volume on any given day, it's the retail investor that I think you can thank a lot of why the U.S. economy has remained so resilient over the last 12 months.
Great. And the crash had happened Friday. I think you had said after 4:30. It was later on Friday. I guess I don't know if you guys have any thoughts on just, you couldn't really see how the stock market was doing it then at that point because the markets had closed. Do you have any thoughts on what that says about crypto, or just kind of seeing that all sort of happen?
Yeah, it strikes me that this was a movement in a kind of fear-based direction, right? From maybe the most powerful voice in the president in being able to garner people's attention and have them take action very quickly based on something on social media. We have, just from our markets around COVID time, Roche Pharmaceuticals trades on our market. And there was a period of time during COVID when in the first Trump administration, he would give a press conference every day before the market closed, before traditional markets closed, so maybe 3:30. And he got up to start talking about tests that were going to be available for COVID, which was a tremendous thing at the time, mentioned that they were very excited about their partnership with the great tests coming forward from Roche. And I've never seen screens light up the way that they lit up for the 25 minutes between when he said those words and when the market closed. So there's this immediate action, which I think is similar to what you saw on Friday, and what we'll see probably in cycles certainly as political influence drives markets. But also, to your question, then the market closed. Then it was 4 o'clock, and the market closed, and everybody could take a breath and think about what this means and come back the next day with a little more kind of rational approach to trading. The crypto markets leave that open, and in many good ways, I think to Saumya's points, about people buying the dip and retail investors being there to sort of right-size markets or price dislocations when things like that happen. And you need a continuous market for retail investors to get back into that. But there's also a very difficult spot for retail professional traders, anybody who's involved in the market when you don't have a chance to take a breath. So I think it's going to be fascinating to see how crypto markets develop and whether there are breaks or other mechanisms for providing that breath, or whether we just say the market's going to survive, the market's going to persist, and we're just going to let things go and it'll work out.
I think we could take this a lot of different directions, but every crypto cycle is 3x a normal traditional finance cycle, and I've been in the industry for long enough to get extremely tired during every crypto bear market. The bags under my eyes right now, they're not from travel yesterday, they're from being in the industry. I think one thing that I want to just point out that contributed to how quickly value was deleted was that a lot of people trade on leverage, with a lot of leverage in crypto. And crypto has uniquely invented the perpetual future, which is a futures contract that doesn't expire. It just gets paid out on a regular cadence. It's actually quite brilliant, and I think it's a great innovation. And it's been used by retail traders to take 1000x leverage positions. So what happens when you take a 1000x leverage position? What happens if the price moves against you by 1%? Well, you're down 10. So what happens when the price moves down 10% and 20%? Well, the exchanges, the venues where this happens, they have this feature where you cross-collateralize your positions. And so they start to pull from your other positions. And that's where these big liquidations came from. That's how people were made whole. So DeFi worked, crypto worked as designed, but the people that got very hurt thought that they were safe with their crazy 1000x position and this other stuff on the side that wasn't going to get touched that actually got called so that they could get liquidated and fully repay their loan. So those are things that I think we need to be more careful about, for sure. I think that I, for one, don't think any retail investor should ever trade with perps. I don't trade with perps. I barely use any leverage, and I would call myself a highly sophisticated crypto trader. So that's part of this meme phenomenon too, is like when the momentum trade is at play and everything is moving up and to the right, and it's like, oh, I can, without having to full port my whole bag, I can go 1000x levered on this position, and whoa, it's just printing green over and over. And then to your point, I go to sleep after the trading day has ended, but it hasn't because it's crypto. And then this big move happens, and boom, all of the value that you've been trading and stacking for years, potentially, I hope not your life savings, I hope not your children's college fund, just got called as part of your liquidation. So those are areas that we definitely need to be careful about. I will say, on a good note, thanks to the regulatory eye that has come to crypto lately, a lot of this happened offshore. And in fact, I don't know of a trading venue onshore in the US where you're allowed to take 1000x leverage. So I don't think it was the US folks where that was happening.
Great. And now turning to regulation, I want to ask you a couple questions, Christina. Just wanted to start off too. Could you kind of take me through how do you guys view meme coins right now?
So the Bahamas, we took the position that we developed a separate taxonomy for digital assets. So in as much as a meme coin is a digital asset, it's captured by our legislative framework. But that said, I do think that I agree with the SEC's position that meme coins really should not be regulated as capital markets instruments. But in as much as they are fungibles, I think they ought to be captured and regulated somewhere, because as fungibles, they're able to be exchanged as currency. And so whether that's going to be captured by the CFTC or some other regulatory framework in the US, then I think that they ought to be captured somewhere in a regulatory framework, in as much as they're going to interact in the financial ecosystem. But I do agree with the SEC position that they shouldn't be captured as capital market instruments.
Right, because the SEC had said earlier this year that meme coins were not securities. And so you're saying too, the CFTC, could it be where like a meme coin then is a commodity?
Well, as a fungible, you have to recognize that there's either secondary market trading, or it's being captured in the financial ecosystem somehow. And both of those are cause for some level of regulatory oversight. I think before we get to that position of regulatory oversight, though, you have to really have a deep dive into what the actual activities are, and what are the harms that you're really trying to mitigate. And I'm not sure that that's entirely understood yet.
Mm-hmm.
Can I ask a question?
Yeah.
Sorry to step on your toes.
No worries.
So would that knowledge, the kind of background information, come from something like an innovation exemption or something like what the SEC's talked about to allow for some of this activity?
So you're asking me some very specific questions about U.S. regulation. But I think, I don't know that it's an innovation exemption, because an innovation exemption implies that we're watching and eventually we're going to take a look at this. Right. And I'm not sure that that's exactly what needs to happen here. I think we may know enough about it to be able to come down one side or the other on where this should fall. Right. But I think what we know, just around what the coins are, right, they're not necessarily capital market instruments. And capital markets meaning very specific instruments that has to do with the raising of capital and or secondary market trading of capital for the purpose of funding businesses, right? So they're not these instruments at all. but there is some secondary market trading. And so I'm not sure that it's innovative in as much as you're used to the secondary market trading because you trade baseball cards or you trade other things, right? So you know what they are. I think we just have to figure out what this interaction is really in the financial system and decide as regulators what are the harms that we want to protect or mitigate against.
I think framing them as collectibles, kind of like that, is a good approach, frankly. As someone that launched a really dumb one, I was very clear there's no value here except for the laughs and the friends you make along the way. We even got hacked. I mean, this all happened in 4 hours. This is crazy. The market cap got up to 20 million. It was nuts. Anyway, but there are things that happen around meme coins that I think could use a little bit of help on the regulatory side, but there also might be current or legal regimes that stand in as well. Like, if you are raising money for a coin and you're lying about what it is, then that's fraud. And regardless of whether it passes, the test to be a security, like that is its own thing that you should be prosecuted for. I think some of the marketing in the secondary around meme coins is terrible and really bad for my industry. Gives us a really, really bad look. And then some of it I think is totally harmless. Like the Roaring Kitty stuff, I actually don't have a huge problem with because they acknowledged many times that they were stupid and that they were not going to sell. And that was part of it. It had no value. Like it was kind of like...
And I think that's key. The distinguishing factors that you gave around the disclosures is really key for how a regulator or how any law enforcement agency, even if it falls outside financial services regulation, how they would look at the issues. And you said that you were very clear that this is for fun, this is a stupid coin, it's worth nothing, you're not going to do anything with it, and you made no promises to the investor. And that's very key in your disclosures. But I think when people start getting into making false promises, making promises on returns, making promises in terms of what they're going to do with these meme coins, then if they're not only in the region of fraud, then they're into the region of potentially falsely marketing a securities or falsely marketing some other instrument.
Yeah, and I also think like manipulating the underlying token is bad too. And it does happen. You see it all the time and you can see it on chain. So whenever there's guidance on what you're allowed to do there or not, I think there's going to be a nice little hunting season for regulators. But I would love to see that stop too, because again, my bias in this is I actually do believe in crypto and I believe in upgrading the market infrastructure, and all the bad stuff that happens is a function of how cool it is to be able to move so fast and have programmable everything. And I hope that we can identify those behaviors and find regulation or other market mechanisms that make that clear that we don't want that, or we're going to punish that.
I feel like you,
No, go ahead.
Oh, sorry. I feel like you might have already answered my question, but I wanted to see too, Christina, what concerns you had too about meme coins. What kind of keeps you up at night about meme coins? I'm sure there's a lot of other stuff too you're focused on, but what are you sort of thinking about when it comes to meme coins?
Yeah, so I mean, I think the issue, and I think the issue is how do you distinguish this issue of what's when they're going into a territory of fraud. I mean, I think that's probably the biggest issue. The second big issue is that sometimes these coins can start out looking one way, and then they morph into something else. They may start out looking as a fun coin, something that's completely for fun, and then they start turning into investment instruments.
Yeah, like Iggy Azalea launched Mother,
yes,
which was just a meme coin, and then it kind of turned into a cell phone carrier. But yeah,
and so that as a regulator is very tricky to navigate, and because you have to find the right point at which you come in and say, look, we're now concerned about this. So those are types of areas that I think regulators are going to have a lot of flexibility around knowing exactly what the trigger points are and we're going to have to know a lot more in-depth knowledge about how these coins are operating and how they're actually functioning in the markets.
Yeah, look, as a secondary market operator, we see a lot of this. You even see companies that morph and change. It makes me think of disclosure as one of the basic tools to provide that kind of information, whether it's on the offering, and I think all those points were great in terms of fraud on the offering. The same thing exists with manipulation or with fraud down the line.
That disclosure is good, and it can be managed when the morphing is controlled by the issuer, but when it's not.
Right.
Or
even when there is a specific issuer, you get into circumstances where there's no one in control of this thing. And the last panel covered that too on regulation. How do you provide for disclosure or even a disclosure framework around a truly decentralized instrument? Who is providing that disclosure? What does it mean? It's a tough job. I do not envy your role.
And you know, what the market and the crypto enthusiasts will tell you is that, well, everything is disclosed because it's out in the public. Well, regulators aren't really thinking that way. The way we're thinking about it is somebody's going to have to be held accountable.
Yeah.
Right, sure.
You know,
There's a bad actor involved somewhere down the line.
Absolutely, yeah.
Great, and wanted to direct this one too towards Saumya and Dan. And I think you touched on this a little bit, but are there more protections needed for retail investors, and what do those sort of look like?
I don't want to over-index too much on Friday since, there's a recency bias for sure. But I do think it's kind of interesting to think about how it might have played out differently had it been in the U.S. equity markets as opposed to the crypto markets, because there are some breaks that are built into the equity markets that don't yet exist in crypto markets, and that we maybe should consider it as, people in D.C. are thinking about crypto market structure. So one advantage I think we have on the U.S. equity side is that we have regulated market makers. There's market makers in crypto, but they're not regulated in the same way as on the equity side. On the equity side, you have the Citadels, Virtues, Jane Streets of the world who have the right to continuously provide quotes for a long list of tickers, but they have also an obligation to continue to provide those quotes even when the going gets tough, when markets get a little bit volatile. They have to stand behind the quotes that they're providing to the market. And for them, it makes sense because they get to clip the spread in good times, but it means that they need to take some risk on in the business and sort of support retail and the U.S. markets more generally in sort of more volatile times. You didn't see that. You don't have that in the crypto markets. And so on Friday, what you saw is a lot of market makers either really increase the spreads on their trades or just get out of the market altogether. And so you saw very few bids. And so naturally, prices really cratered. You wouldn't have seen that same sort of dramatic fall, I think, on the equity side. The second advantage I think that we have on the equity side is that we also have circuit breakers, which are sort of like enforced referee stops when the shit really starts to hit the fan. There's two kinds of circuit breakers. There's single stock circuit breakers, which is like when you go plus minus 10% in like 15 minutes, trading will be halted in that single stock, and the timing is usually like 5 minutes, so it's just like really a short timeout. And then there's also market-wide circuit breakers that are tied to the S&P 500 dropping, there's level 1 at 7%, there's level 3 at 20%, and sort of the time on how much trading is going to be halted depends on how far the S&P has halted. And so on Friday, we saw that there was a glitch at Binance. It sort of cropped up around 4:30 and was resolved around 5:12. But during that time, people panicked and they lost their heads and they sort of sold. And it was also, auto liquidations that forced people to sell. So it wasn't people pounding the button and trying to get out of their positions, but it was just the smart contracts operating as they were designed. And that maybe could have been prevented on the equity side if there was a forced pause. And because it only took Binance, less than an hour to fix this glitch, but by that time the damage had already been done. And maybe if they had sort of a timeout where there were no trades clearing, they would have caught it more quickly, fixed the peg on this stable coin, and then, not maybe 19 billion would have been 10 billion instead. I don't know. I'm making up numbers, obviously, but you could see that hypothetical pretty clearly. And I think, at DC FinTech Week, we're often sort of critical of regulators, and we like the sort of laissez-faire attitude on the crypto space, and less regulation is often beneficial. But I think Friday is a little bit of an illustration about how actually we should borrow we should take, the good aspects of U.S. equity market structure and port those over to crypto, and then leave the things that really haven't stood the test of time.
Yeah, I agree with a lot of that. I think there are macro structures within the U.S. equity markets, circuit breakers being maybe the most relevant one for this kind of conversation. I've 15 years as the general counsel of a secondary market operator. Yes, I started when I was 19. And I've seen 3 market-wide circuit breakers, only during COVID. And it does matter. Johnny was talking a little bit about activity that happens in the crypto markets where there were calls. All of that, algorithmic trading, all of that gets affected in moments of panic in the equity markets as well. And those circuit breakers, those market-wide halts, actually made a difference and actually stopped the precipitous fall. There was one that happened 1 second after market open, and it was going to be maybe the worst trading day in US history, and it wasn't, because there was something like a circuit breaker, and it made a big difference. So that's very macro level. There's more control from market operators, and I'll put us in that category at OTC Markets. We have things like risk flags, so that if there is price dislocation in something, if there is stock promotion, we're not that creative. We put a big megaphone icon next to the stock symbol on our website. If there is a public interest concern with respect to a company, we put a skull and crossbones next to the stock symbol on our website, right? So there are mechanisms. That's not the issuer doing it. It's not a full solution, certainly, to these kinds of problems. But it is an additional step you can do to help show retail investors there's something happening here that makes this not what you would expect it to be, that makes this market activity something anomalous, and you might want to take a second look, and we're going to just be here to provide you with that information, not tell you yay or nay, but that also helps. It stems the tide just a little bit.
I'll add a little bit to this from the very crypto native perspective. Is I don't think those things would work in crypto because you still have DeFi. And all that's going to happen, if you circuit break all the regulated venues onshore, DeFi is going to continue trading. And now you're going to have 2 prices. And you're going to have people in DeFi maniacally arbing, and then you're going to have the people that are on the sidelines being upset and suing their trading venue and all sorts of stuff like that. Everything that I said before about wanting to fix some of this stuff, that's very, very true. And at the same time, the reality of the technology is what it is. And I actually think that I have been in this space for a long time. I've done very well. And I've never, ever, ever recommended to anybody in my family that they buy Bitcoin. I'm serious. I think that when you go into crypto, you should go into it and have to wear a dunce cap for a week before you're allowed to trade. And if you keep it on, you can stay, acknowledging that you're dumb enough to take all these risks in a 24/7 market that is liquid depending on where the venue is. I guess it's a more caveat emptor approach of this is hard, this is dangerous. Don't full port your net worth into this market and think that you're going to have a good time, because you won't.
That's the skull and crossbones is our caveat emptor. That's what we call it. That's the idea.
I like the skull and crossbones, by the way.
Use it. Skull and crossbones coin. You heard it here first.
And I just have one more question left. So if anyone in the audience too has questions, just wanted to ask, of course, lawmakers on the Hill right now are working on legislation to regulate the crypto industry as a whole. I don't know too if Johnny or if you, Christina, have any thoughts on kind of where, I think we talked a little bit too at CFTC, but sort of how lawmakers in Washington should view meme coins and how that would kind of work in a market structure bill.
Okay. First, because I saw Hester a few minutes ago, I just want to commend SEC in particular on the outreach they've done with the industry. It is a complete about face from years before. When I got the invitation to come to the DeFi or the tokenization roundtable, I was actually scared. I got the email and I was like, oh my God, my numbers come up. I better move some assets offshore. Oh, they're on chain, it's fine. But no, it was super productive, and it was incredible to be included in that. And the commission itself is being extremely thoughtful about how they're thinking about this stuff, and will respond to my random LinkedIn messages or my emails or my text messages. It's awesome. So when it comes to meme coins, it's really hard for me to like just throw down a framework. I do think the posture about viewing them as more like a collectible is correct. I do think there are bad things that people do around that also people do with baseball cards and the like. And do we need more regulation for those activities? I'm not sure. If we do, great. If we don't, then maybe there's enough law already. I'm not sure.
No, I mean, I think I tend to think also that they're more in the category of collectibles, and you probably don't need a specific regulatory framework to address them. That said, there are some ways that they're interacting in the financial system that regulators need to watch out for. Whether it needs to be in clarity, I don't think so. But I think it needs to be captured somewhere within a regulatory framework. That may be something out of Treasury, somewhere else. I don't know. I'm not sure about the U.S. structure enough. But there are some financial activity that needs to be captured somewhere. Because while they are like collectibles, like baseball cards, the fact that they have the ability to interact in the financial markets, I think that changes the game slightly. I think I also agree that that the DeFi nature of digital assets makes it very difficult to put in place the same types of frameworks that you will see in traditional finance. So I think I agree with that.
Great, that's awesome insight. Did anyone have any questions? Oh. Ready.
The law professor question.
Up since 3 o'clock in the morning. So, the really interesting about meme coins is precisely, I don't recall as a professor thinking about, the last 80, 90 years of regulatory history, ever having a conversation on how do you regulate something that doesn't have value, right? I've taught a lot of classes, and I can't ever remember having that particular kind of conversation. And yet, we talk about markets, for one, and so it's like a market for something without value is kind of interesting. I don't know what that necessarily means. And then we also use the word coin, to follow the word meme. So meme being the adjective and coin being the noun, and there's at least implicitly some kind, in the term of art, meme coin, there's like some implicit assumption of value, right? So like would it change our understanding if instead we started to call it, and by the way, Johnny, I love the financialization of culture. I was like, ooh, and you put that on a t-shirt. But how about if you're going to call it the financialization of a collectible? Because I do think that the concept that you can financialize, it's not exactly a baseball card, because it is interacting in a market where the price is going to fluctuate a whole lot more than the baseball cards I had when I was a kid. If anything, the price only changed 20 years later when the rookie card of someone who ended up playing ended up being actually quite a star, and that was sort of an incremental, increase in the value of the baseball card, year on year, depending on the performance of the player. It's like, but I find the idea of a meme coin just sort of riddled with logical inconsistencies that make the question of regulation very difficult. Not to be too, again, sorry, I'm tired, so I can only think in the legal Latin, like from an ex ante perspective, like how do you set rules ahead, looking on a forward-looking basis for something that is sort of, it's riddled with all kinds of sort of logical inconsistencies. I just find that really tough. At the last time, 2 minutes or 2 seconds, digital assets are inherently more complex, no matter what it is, just because it's not a physical baseball card, right? So, some people are like, well, what is this? Is it a meme coin? Is it an NFT? Is it whatever it is? And so, the general question of disclosure is kind of interesting because we have many different models of disclosure. We have securities law disclosure. We also have product disclosures. There's disclosure on my cereal box. Like what exactly does that mean? and how does it fit? So that was like me vomiting out the last amount of coherent or incoherent thoughts that I had. But like, how do you work forward and through like the inconsistencies of like a meme coin with no inherent value in a market? And I guess I'll start with our regulator.
Yeah, I'm not sure that the no inherent value is the problem as much as you have a coin that is really not a capital markets instrument. It's not really a currency, but it's doing things that mimic the way they behave in different platforms. And one of the things that I forgot when we were talking through the considerations for regulation is that, you know, in as much as these coins are also trading on platforms that will eventually be regulated, then that creates a different level of problem because they definitely will be captured by extension by regulation in that way. Otherwise, they'll have to come off those platforms. But I think the challenge for meme coins and where regulators probably sit now is that we really have to suss out the bottom of what are the specific harms being done either to the financial system or the capital markets. And I'm not sure that we've really gotten to the bottom of sussing out those questions and whether we've identified any harm. I'm not the type of regulator who's going to say design the regulation first and then figure out the harm. I'm going to say you figure out the harm first and then you design the regulation. And I don't think that the harm is that there is no value. Because I think there are other things that can capture those issues in law enforcement, like fraud. But I think you have to figure out what the harm is to the market first, what is the harm to retail investors, what is the harm to the financial ecosystem, and we've not even begun to suss out those questions exactly, and so I think, yeah.
I think one similarity between meme coins and meme stocks is the value isn't in the underlying asset itself. It's not in SHIB, it's not in Doge, it's not in GME or AMC, but rather the value is the trading behavior. The value is being able to like put a bet on it and sort of do it together with your friends on social media and have a little bit of fun. That's the value. And I think a little bit where, the lawyers and the regulators got stuck, since 2021 is that we don't have a framework where the value is kind of the gamble. We don't, and not only do we not have a framework for how to handle that, we also just frankly don't like it. It just like offends our sensibilities a little bit. And so you saw a lot of that is sort of what powered, I think, that offending the sensibilities, being that's not good enough for our retail markets is really what I think powered a lot of, during the Gensler administration, just a refusal to engage because it's like, this is silly. Like, why would I even regulate it? There's no value here, quote unquote.
So I would look at meme stocks and meme coins a little bit differently. And I do think that there may be some potential issues in the meme stock area, right? I mean, so what you're seeing, so if you look at the way regulators think through what are we concerned about? We're mainly concerned about protecting retail investors and ensuring market integrity. So we're concerned mostly about those things. With meme stocks, you have a group of retail investors. They're retail investors, so these aren't the people we're normally concerned about. But they're coming together on communities, and they're going to drive the price up. If an individual or institution were doing that, we'd either call it pumping, we might call it front running, we'd call it a whole number of things. But then these are groups of retail investors, so we're not calling it that. But then you have them doing that also sometimes to disrupt the activity of a large institution. And as regulators, we're not really too concerned about the large institutional investor, but we are concerned about market integrity. And so we have to ask ourselves in that context, is there harm to market integrity or is there harm to other retail investors? And so those are questions there for regulators. And then when you put into that mix the potential for CEOs, you mentioned AMC, earlier. You know, he was a CEO who was very much involved in encouraging the activity of these retail investors. And so you have a CEO, and it was a CEO then, it could potentially be a big institutional investor who's encouraging that activity. And then I, as a regulator, say, whoa, wait a minute now. So he may not be strictly violating disclosure requirements. He may not be strictly doing things that looking like front running, but he's enabling it. And I think that you're going to find that regulators very soon will find a way to connect those dots and say that in as much as that this person is enabling or encouraging market manipulation, there is something here to take a look at.
All right, I think we have maybe time for one very quick question here.
Quick question. What's the regulatory answer to the threat of quantum computers?
That's
A very quick answer to that question.
that's beyond my pay grade.
Answers provided at the bar after
Yeah,
this.
there you go. Yeah, I think we're between everyone and happy hours. So this has been a really insightful panel. Thank you guys so much, and great.
Thank you. And I'm supposed to come up with this incredibly insightful summary of all that you heard today, but we'll do that at drinks. So let's call it a day. Thank you, and thank you, Chris.
Thank you.
Thanks, everybody.
Yeah, sure.